Welcome to our second video of class 11 accountancy. First chapter, Introduction to Accounting, second class. In our previous class, we discussed about the history, development, need, meaning, features of accounting. Through features, we discussed the four main elements of accounting in which we studied about the process of accounting. In the process of accounting, from the first step to its last step, we learned that accounting at its every step in its process reveals some information, and this information is used by various interested users. By using this information, the interested users make their decisions regarding business organization. In today's class, we will further the concept we studied in our previous class. So today we are going to discuss about, first of all, about accounting as a source of information. Just by going through the process of accounting, we have understood that at its every step in the process, accounting provides some information. This information starts from recording to the preparation of financial statements, and these financial statements then are communicated to the various users. So ultimately, the financial statements are termed as information provided by the accounting. So if we talk about accounting as a source of information, then we talk about financial statements always. These financial statements are then utilized by the users, which we have already discussed in our previous video. To know about them, you can again view the previous video number 1 of this chapter. These financial statements are divided into two statements. First is the income statement, which reveals profit or loss amount, and second, the balance sheet, which tells us about the financial position of the business. To prepare these financial statements, the accounting discipline is subdivided into three branches. It is subcategorized so that the work is divided. Because these financial statements, when we have to reach to these financial statements, we require a lot of work to be done. On the basis of the steps in the process of accounting, the work is divided. This division is then known as branches of this accounting discipline. These branches are mainly three: financial accounting, cost accounting, and management accounting. Financial accounting, cost accounting, and management accounting. Financial accounting is related with recording of business transaction. The accounting actually which we are talking here about is financial accounting. The process which we have seen relates to financial accounting. It starts with identifying a transaction, and then it ends with preparation of financial statements. So financial accounting is mainly related with recording, classifying, and summarizing the financial transactions into the books of accounts. In the summarizing process step, we then prepare the financial statements. So the main objectives of this financial accounting is, number 1, to provide information about financial performance, that is profit or loss. Then to provide information about financial position of the business, that is about various properties, that is assets, and the liabilities of the business. Then to provide useful information so that the users can take their decisions. So to provide useful information to the users of accounting information. These are the three main objectives of financial accounting. Then comes cost accounting. Whatever we have recorded here in financial accounting, from transaction number 1, we are giving some information. All the transactions in financial accounting are recorded in chronological order, date wise. So those information are then utilized by cost accounting. Cost accounting refers to the branch of accounting in which cost related affairs are calculated. The cost of a product is determined. The cost of a service is determined so that selling price can be fixed, so that any overheads, that means any expenses which can be controlled, or the cost which should be controlled, that can be exercised with the help of tools and techniques of cost accounting. So it refers to mainly calculating or determining the cost of a product or service so that selling price of the same can be fixed. It helps the management in exercising control over the cost of the product and the services. So it is also very important. There are three elements of cost of any product or service: the material, the labor involved in using that material for conversion into finished product, and then some other expenses apart from the expenses incurred on material and labor payment. The three elements are totaled at one place, and then the cost of that product is determined. In that cost, the profit is added up, and then it becomes the selling price. So this way, this accounting helps us mainly in determining the cost and the selling price of a product. Then comes management accounting. Management accounting mainly related with decision making process. Information provided by financial accounting, that is the financial statements, are here analyzed, and the analysis is then binded up into a report. A financial report is prepared. Analysis is done by using the tools and techniques of management accounting, such as ratio analysis, cash flow analysis, funds flow analysis. Other various analysis techniques are also there which are used here in management accounting. It gives decision power to the management. They will be able to say something about the future of the business after making this analysis. Mainly it is concerned with budgeting, forecasting. So this is also a very helpful branch of accounting. So this way, the accounting in preparing the financial statements take use of these three branches of accounting. Then the accounting information provided by the financial accounting or the accounting, we can say, should be having some qualitative characteristic. That means what sort of information it should be. Should it carry some qualities? Yes, of course. It should have some qualitative features in it. And what are those qualitative features? This is also another important aspect about accounting. So the information provided by the accounting to its users must be reliable, relevant, understandable and comparable, so that it makes some sense to the user in using it for their decision. So when we talk about qualitative characteristics, first comes reliability. It means the accounting information provided should be reliable. That means the user must depend upon the information provided to him. He must rely upon it, that whatever has been provided to him is completely true and he can take his decision on the basis of the information. So it should be based on facts To be reliable, the information must be based on facts, and to be based on facts, it has to be on the basis of the documentary evidences. That means the financial accounting says all the transactions recorded in the books of accounts must be supported by an evidence. So with the help of a documentary evidence, all the information should be provided. That means whatever is provided to the users as an accounting information, that must have some documentary evidence for it or in favor of it, and then it will be reliable. It should be free from bias. It should not be prejudiced. It should be free from bias. Unbiased information has to be provided, then it will be reliable. Then relevance. Relevance means the information provided should be relevant. It should not provide unnecessary or irrelevant information. Rather, it should provide timely information which are required by the user for taking his decision. If it is not relevant, if it is not related to the matter for which a decision maker requires it, then it is of no use for him. So it should be prepared keeping in view the requirement of the users, the need of the users that we have already discussed in our previous video. There are two types of users, internal and external, and under the two categories there comes many persons, many types of persons, and for each and every person we have discussed what is the need of a particular user. So keeping in mind that need of a particular user, we should provide the accounting information. So it should be necessary and relevant. Unnecessary data should not be included. It should be timely presented. Then understandability. Understandability means the user must understand it in the same sense, in the same manner in which it has been conveyed. What I want to say you must be reached to you people in the same meaning. That means you must decode it in the same meaning. So encoding should be done in such a way that decoding also carries the same meaning. If decoding is in some different meaning, then it is not understandable. And to make it understandable, it should be provided in simple formats. It should be provided in simple formats, and for that common formats should be utilized. If it is understandable, then it should not compromise with reliability and relevance. It should be reliable, it should be relevant. So without compromising with reliability and relevance, an information should be provided to the users which is understandable to them. That means it must be understood by a person who is not from the accounting background. So in such a way it should be presented. So it is all about presentation part. Then comparability. Comparability means the user must be able to compare the accounting information provided to him by us of our business with the other business of the same category in the market. When he makes comparison, then only he will be able to take a decision whether he should go with our business or not. Like an investor, he wants to invest in your business, then he should be able to compare with the other business why he should invest in your business. And for that, common unit of measurement should be used. Common formatting should be used. So it should be common in terms of currency. If you are from Indian origin, then your data should be presented in rupee. It should not be in dollar, because the other business of the same category will be providing the information in rupees only. So it should be comparable. It should be comparable in such a way that it is helping in making both type of comparison, intra-firm as well as inter-firm. That means the user may be from within the organization and he wants to compare the performance of two particular departments, two departments of a particular business. or he may be an outsider who wants to make comparison between two firms. So both type of comparison should be possible with the help of the accounting information provided. So these four qualitative characteristics are very, very important for an accounting information. So after this accounting as a source of information, let us go back to the main branch, main field, that is our accounting. There are two more words which are related with accounting. Number one is bookkeeping and number two is accountancy. So what is the difference between bookkeeping and accounting, and what is the difference between accountancy and accounting? These two terms. So accounting we are already knowing about. It is a wider term. There are actually three terms, three words which are related with accounting knowledge. First is the account, then accounting, and then accountancy. Account is an outcome of accounting. That means what we prepare ultimately through accounting is an account. So it is the final product of accounting. Financial statements are the end product of accounting, but an account is mainly prepared first in accounting. Then accountancy is the knowledge of accounting. It provides us knowledge of accounting. How to make accounting or how to make that account, we require a process, and the knowledge of that process accountancy tells us about. So these two words, let us first discuss bookkeeping and accounting. Bookkeeping actually is the part of accounting only, which is the primary stage of this wider term. The initial stage of accounting, that is identifying, measuring, recording and classifying. These are the initial stages in accounting which are done on regular basis. So these are the part of bookkeeping. So whatever is done in the initial stage of accounting is known as bookkeeping. That means it refers to keeping a set of books to maintain the record of accounting, to maintain the record of transactions in the books of accounts. So bookkeeping means keeping a set of books in which all transactions are recorded date-wise. First, we prepare the journal and its subsidiary books, and then with the help of the journal and the subsidiary books, another book is prepared that is called as ledger. And in this ledger, we prepare all individual accounts. We maintain all individual accounts. So this is bookkeeping. This is the work which is mechanical in nature. That means lage raho. It is to be continuously done. It takes place based on the transactions. Today, whatever transactions happen, you are recording in your day book. Then the next day in the morning or late evening of the same day, you are transferring them to the ledger account, or weekly you can do so. It depends on the size of the business, on nature of the work of the business. So what is the load to the accountant? What is the workload of the accountant? On the basis of that, the accountant will be maintaining his ledger. And then these ledger accounts are balanced, they are total. And then it is handed over to the senior people. So where bookkeeping ends, accounting starts. After classification of all necessary transactions recorded date-wise, they are grouped under particular headings in the ledger. Then it is handed over to the senior people, and then they will be doing the accounting work, which starts from summarizing part. So bookkeeping is initial stage work. It is mechanical in nature. It is done by the lower level staff, that is the clerks of the business. It is a routine job, whereas accounting is performed by senior staff. It is analytical in nature. And it is not a routine work. It is analysis work. It is finalizing work. And here we prepare financial statements. That means financial accounting has in it bookkeeping and accounting both. So bookkeeping and accounting are two terms. Bookkeeping is the part of accounting, whereas accounting starts where bookkeeping ends. Then comes accounting versus accountancy. As we know, accounting is the process of identifying, measuring, recording, classifying, summarizing, analyzing and communicating the financial transactions to the various interested users. Accounting is the knowledge of making accounts. Accounting is the practice of making accounts, whereas accountancy is the knowledge of accounting. How this accounting is done? It is the knowledge given by accountancy. So accountancy is the systematized body of knowledge which tells us about the rules, regulations, principles, conventions, postulates, concepts, assumptions about the accounting. So it is a wider term. It includes in it accounting. So these are two basic terms: accounting, bookkeeping and accountancy. So after going through this description of accounting, its branches and as information system, now we can develop the objectives of accounting. What are the objectives of financial accounting? What are the objectives of cost accounting? And what are the objectives of management accounting? These all are included as objectives of accounting, the discipline, main discipline, which has been subdivided here into these three branches. So the first objective comes to maintain systematic records. That means accounting is done in order to maintain proper books of accounts so that all the financial transactions can be recorded date-wise at their proper place. And for this purpose, various books are maintained. Then comes to calculate profit and loss. And why this is done? It is done so that necessary steps of the other objectives can be fulfilled. Then to calculate profit or loss is the second objective. With the help of the systematic records maintained here, the accounting then aims to calculate the amount of profit or loss, and for this purpose an income statement is prepared at the end of the year or at the end of the accounting process. That is the part of financial statements. So the another objective is to calculate profit or loss. Then to depict financial position, and for this purpose the systematic records maintained here are utilized and a balance sheet is prepared. With the help of that balance sheet, accounting aims to provide or determine the financial position information. Then comes to provide accounting information to users. There are various users: internal, external, owners, management, employees, creditors, suppliers, lenders, money lenders, banks, financial institutions, government, tax regulators, public, research scholars. There are various users of accounting information. They require various types of information time to time. So accounting aims to provide them this information. The first three are the main objectives of accounting. If the question comes, what are the main objectives of accounting, then you will write down these three only. And if the question comes, explain all the objectives of accounting, then these three can also be added up. Otherwise, these three we are discussing here, other than the main objectives, are part of these objectives only. So accounting aims to provide all sort of information to various interested users as per their need. Then to assist the management in budgeting, in forecasting, in exercising control over the cost in cost accounting. So accounting aims to provide all sort of help or assistance to its management through the financial information, that is the financial statements and their analysis. Then to protect assets of business, that means to make proper record of assets. Whatever are the properties of a business in its name, a proper record of that is maintained at one place so that the businessman and the business knows about it. That what are the assets, what are their book value, so that if they need to assess the value of the business, these records can be used at the time. So these are the objectives of accounting on the basis for the purpose of which accounting is maintained. that we have already discussed in our previous video when we discussed about need for accounting. I explained in that video. You can please go through with that. Then advantages of accounting on the basis of the objectives. And so far, whatever we have discussed in this video, so far as well as in our first video of the chapter, we can establish that accounting provides these benefits, minimum these benefits to everyone who is making it, who is maintaining it. Otherwise, accounting has many benefits, but they can be penned down into these points. First is financial information about business. That means accounting helps business to maintain and provide the financial information about business. And financial information records two things. Financial information includes two informations. That is, number one, financial performance about profit or loss, and then financial position, that is about assets and liabilities. So it helps to know about the financial information because they are maintaining systematic record. Then assistance to management, it provides help or assistance to the management in making various decisions. On the basis of these records maintained here, accounting provides to the management. The management makes various decisions regarding the future prospects and growth of the business. So it is an assistance to management. Then facilitates comparative study. As we have seen here in the qualitative characteristics also, that the information provided must be comparable. So it helps in making comparative study because the records maintained are so well prepared that any user can make comparison with the other type of business, or the managers of two various departments, they can discuss about the growth or prospects attained or not on the basis of the records of both the departments within the organization. So it facilitates comparative study. Comparisons can be easily made. If you have financial data with you, you can compare. If we want to compare the students of our class, then there are various categories, various criteria on the basis of this, on the basis of which we can compare, like their height, their weight, their age, their marks, performance, various criteria are there, on the basis of which comparison can be made. So how is it possible? Because we have the data bank of all the students in such a way. Likewise, accounting also within it keeps all sort of data bank of the business transactions. On the basis of that, comparative study can be made. Then replaces memory. It is very important here. The memory of a man is limited. A person cannot keep in his mind all the transactions for a long period of time alive in the mind. So to replace the memory, accounting records are maintained. So it helps the management or the accountant or the businessman to relieve them from this burden of keeping in their memory about the transactions, what happened with whom, what amount of transaction was done, who is our creditor for what amount, who is our debtor for what amount, what is to be paid to X, what is to be taken from Y, on which date the transaction took place. If we say someone, yes, you have to pay us this amount, then he will ask, tell me the details why I have to pay you. Then it is very difficult for a person to keep in the mind all such things, date wise, data wise. So accounting helps businessmen to replace the memory. That means the proverb which I discussed in the previous class also, pehle lik, piche de, bhool pade, kagad se le. That means first record, then if the time comes, whenever the time comes, you see it from the paper and ask for the payment. So it is replacing the memory. Facilitates settlement of tax liability. Time to time, government taxes are to be paid, and with the help of proper accounting records, we can know about our tax liabilities. like GST, income tax and all that. For income tax there is a time on between which we have to make payment. The assessment is done for the full year, so it can be easily done with the help of properly maintained accounting records. Likewise, settlement of GST can be done every month or every quarter. That can also be done easily. Then evidence in court. Yes, accounting helps us as a full-fledged evidence in the court of law in case of any dispute, in case of any suit against the business. Business can provide its record in the court of law as an evidence. So if they are properly maintained, then they can be helpful in courts also. Then helps in assessing value of business. As I was telling here, to protect assets of the business, proper record of all the assets are maintained. When the time comes that we have to assess the value of our business, maybe because of some reasons we are switching over from business X to business Y, then business X has to be sold off. Then what is the saleable value of our business? So that value can easily be assessed because we have proper records of all the assets as well as all our transactions, which may tell us about our pending liabilities. What are the amounts which are still to be paid? So about our outstandings as well as about our possessions, the business transactions will be telling. The records of accounting will be telling. So on the basis of that, we can assess the value of business. On the basis of these objectives, advantages, we can conclude that accounting is very, very beautiful subject, and it is providing us, it is giving us a lot of help in making the business growth, prospects, thinking about future, everything it provides us. Simply keeping the records will help us in doing so, but still there are some limitations. Everything has got some boundaries. So here in accounting also there are some boundaries. Some limitations of accounting are also there. That means where we are bound to not to go beyond that. These are limitations, not the disadvantages. It is advantageous for various reasons, but there are some limitations also where we are helpless. That means some points are there. On the basis of our process, we have seen that some restrictions are there. So on the basis of those restrictions, we can chalk out some limitations of accounting. So first of them is, it is not fully exact. That means the accounting records are not fully exact. It is not in all the cases. As we have seen here that the information must be reliable. That means it must be prepared on the basis of documentary evidences. For every transaction there must be an evidence. But there are some transactions for which estimations are made. It is not possible to have documentary evidence for them. So in some cases, accounting records transactions on the basis of estimations. So this estimation, when we are using, we cannot say it is fully exact, because the record we are maintaining here are not completely true. Estimations, when are made, they depend from man to man. They may be varied. They may be varying from man to man. A person may be estimating maybe more amount, maybe less amount. But when we are recording something on estimations basis, then it is not fully exact. We can say that accounting in some cases, not in all the cases, in some cases, it is based on estimations. Recording is done on the basis of estimations. In our next chapters, when we are going to study about transactions, when we are going to study about some principles of accounting, first we will find that there are, yes, some points of time comes when we use our estimations. So in that case, it is not fully exact. Then it does not indicate the realizable value. All the assets, here we are recording the assets of the business to protect them. These are recorded on their historical cost. That means only their book value we are telling. Only the book value we are telling. We are not telling about the realizable value in our books of accounts. That means realizable value means sale price, selling price of our assets. But we have not purchased the assets for the purpose of sale. We have purchased them for the purpose of our use. So we don't record the realizable value of the assets. So this is also a limitation, that if someone wants to know, suppose there are 5 partners, one of the partners say, what amount of these assets can give us in case of emergency. So that is not provided by the accounting records. So it does not indicate the realizable value. It provides only the book value of the assets. That is, book value is the cost of acquisition, at what cost we acquired the particular asset, minus yearly depreciation. That means minus yearly use value. For what amount we have used, these are estimations only. Like here I told, not fully exact. Only estimations we made that it is an asset of say 1 lakh rupees and we are going to use it for minimum 5 years. Now this minimum 5 years we have estimated only. This is estimation. So it does not give us realizable value. It only gives us book value. Then it ignores qualitative element. There are various quality transactions like public relations, your good image, the behavior of your employees with the customers, because of which the customers are always happy and they feel happy in shopping with your business. These all have got not some only, these all have got a lot of effect on the sales of the business, but still they cannot be quantified. When they cannot be quantified, we cannot record them into the books of accounts. In the books of accounts, only those transactions can be recorded which can be converted into monetary terms. So the quality transactions, that means the qualitative aspect of a transaction cannot be recorded, like efficiency of management, that cannot be recorded in the books of accounts. Your good image, that cannot be recorded in the books of accounts. Good behavior, your good public relations, industry relations, you cannot record them. Okay, so it ignores qualitative element. Then it ignores price level changes. The price level changes in the market, the prices go up, they come down. So when this cycle happens of inflation and deflation, that inflation and deflation is not recorded in the books of accounts. So the price level changes are not at all considered in the recording of a transaction. When we are recording it at any transaction, when we are recording at its original amount, that means its happening amount, then we are not taking into consideration the price level changes which may take place or which have taken place in the market. Whatever we paid, we are recording it for that, or whatever we received, we are recording it for that amount only. So this is ignoring price level changes, which may affect the true position of the business. That means you are not telling on the basis of the price level changes. So economics can say us, no, your accounting records are not proper because they are not taking into consideration the price level changes. Yes, we are not taking into consideration. So this is also another limitation. Then window dressing. Window dressing means manipulating. Manipulation in the financial records is termed as window dressing. Sometimes to show us better, we may use some wrong means. That means either we have increased the value of our assets, we are showing them at a higher value. And how to do that? Just the depreciation rate we will be taking at a less rate. If depreciation in the market, the agreed rate, or we can say that the rate at which the other business are depreciating the same asset, we are taking lesser rate. That means we are showing our assets at higher value. So window dressing is also possible, and it is not a good sign about accounting. That means records can be manipulated, and when records are manipulated to show off better position, then it's not good for the health of the business. So it is a big limitation. A question may be asked you separately, what do you mean by window dressing? So it refers to manipulation in the accounting records. So next comes not free from bias. Not free from bias. It means the accounting records maintained are not unbiased because they depend on the personal judgment of the accountant, the one who is maintaining accounts or accounting records. Sometimes the decision depends upon that person, like which method of charging depreciation should be followed. Straight line method, written down value method. He has to choose the available methods, one of the available methods. So when it depends on the personal judgment of the accountant, and for every business different accountants are there, and every person has got different set of mind, different set of knowledge. On the basis of their mind and knowledge, they pick up the method, or the management can tell them to do so. You have to do in this way. So when it is done on the basis of personal judgments, then sometimes because of those personal judgments we can say that the accounting records may not be free from bias. They may be biased records. So these are some of the limitations of accounting, and but these limitations, whatever we have discussed here as limitations, these limitations cannot prevent us from using the accounting, because the benefits derived from accounting records are more than the limitations here. We may have some preventions for these limitations. We may prevent us from these limitations of accounting, but the advantages which users get from accounting records, they are more than any limitation. So accounting is always for benefit of the society. Then role of accounting. In modern world, the accounting is changing its role from its origin to its gradual development. It is developed as forensic accounting also. That means it is helping in solving the criminal matters. Its role is changing day by day, rapidly changing rather. So nowadays, different roles of accounting if we discuss, then accounting plays role as the language of the business. That means it provides all the information about the business. So if the business speaks about it with the users through accounting only. So accounting is considered as the language of business. Then as a historical record, accounting provides us all information of the past, of the previous year. So it is as a historical record also playing its role. Whatever in future, if you need something from the past, you open your accounting records of that year, of that date, because it is maintained date wise and systematically maintained. So you can easily find out your previous transactions. So because of that, it is playing the role as historical record also. It plays role as current economic reality also. That means though we are not using the price level changes, we are ignoring them, but still the real value of the business, when it comes to calculate, economists also depend upon the accounting records. They use the accounting records only. Maybe we are not using the inflation and deflation, we are not considering the inflation and deflation of the market, but still the accounting records only are used by various economists also to talk about the business health of a country, a business, or a society. Then it is providing us current economic reality. Then as an information system that we have already seen, that accounting provides information to its various users, so it is an information system also, and it is a commodity or a service activity also. That means in accounting as information, financial statements are provided so that various decisions can be made. So this is the end product of accounting. So it is a commodity service also. It is a service. That means accountants are providing their service. Accountancy is a profession which is providing a service in making or keeping the records of these accounts or transactions. So this way we can say accounting has got various roles to play in the society. Some of them we have discussed over here. We will be discussing a lot more about accounting in this class 11 syllabus of accountancy, but for the as far as it is related with the introduction to accounting, we have discussed the history, the development, the need, the meaning, the features, the process of accounting in our first video, and here we have discussed about accounting as a source of information, its branches. Then we have discussed about bookkeeping and accountancy along with accounting, objectives of accounting, advantages of accounting, then limitations of accounting, and role or different roles played by accounting in the modern world. This is all what we have discussed. On the basis of this, there will be a question for you to write about the various functions of accounting on the basis of the objectives, advantages, and so much we have discussed. You have to write down about the functions of accounting. Till we come with our next video on basic accounting terms, what are the various terms used in accounting. Keep watching the videos based on this chapter. 2 videos now are there. First already uploaded. This is the second one. With the help of these 2 videos, you will come to know about the basics of accounting. In next video, we will come up with the basic terms of accounting. Till then, keep watching, keep studying, keep researching. Thank you.